Hey guys, it is Patrick here, and I wanted you to know before you dive right into this accounting information systems lesson that the accompanied worksheet is available for download if you head to my website at www.patrickleemsa.com, or I'll leave the link directly to that worksheet down in the description below. Click on that, download the worksheet, and print it out, and that way you can follow along the accounting information systems lecture that I'm about to teach. So it has all the notes that I'm going to be going over. All you need to do is write your notes and fill in those blanks. So make sure you do that. And here is your AIS lesson. All right, in this lesson, we're going to be talking about some of the characteristics that make information useful to the user of that information or the decision maker. We talked about in the last lesson how, the cost of providing that information to the end user is super important because we don't want our cost to outweigh the value that we would get from that information. But the question is, what makes information valuable to that decision maker? We're going to talk a little bit about the 7 different characteristics that we can look at as far as whether or not information is useful to that end user. So let's get started by kind of reviewing what we talked about in a prior lesson. So in the end, accountants want to provide information that is useful to the decision maker, whether internal or external. So remember that we're going to provide information to 2 parties, really. We've got external users. Those are investors, bankers, the government. And we're also going to provide information to internal users. Internal users would be employees, management, board of directors, although some would say board of directors is also external. They are. But some board of directors are internal, so we want to make sure we cover that. So internally, we've got people that are using our information to make decisions within the organization. That doesn't necessarily have to do with maybe investments from an external perspective. And so we want to make sure that we've got very useful information to both parties at the end of the day. So we've got these characteristics. So we can pull our knowledge from financial accounting as well as auditing to describe characteristics in which makes information useful. So what makes this piece of information that we're providing to a manager useful in their eyes? So these are 7 characteristics that I would say that would make information useful at the end of the day. I'm going to list them here, and we're going to go through each one of them individually to help you understand some deeper level of these characteristics. We've got relevant, reliable, complete, timely, understandable, verifiable, as well as accessible. So let's take a look at each one of these characteristics that we would say would make information more useful to the decision maker. We're going to start with relevant. So information has little value if it's not relevant to the shareholder. So if we're giving them information that is irrelevant, that means that they can't really use it to make decisions. So they don't really need to know that information, which means it's not relevant in the eyes of that user. They want to know that the information can make a difference in their decision-making process. Don't give me fluff. So a lot of you guys are experts at fluff on your 5-page essays, right? So you'll come up with 2 paragraphs of content and then find a way to stretch it out to 5 pages, and it's all just BS, right? So that's the fluff, right? That BS, that fluff, doesn't actually help your case in understanding whether or not you're answering, let's say, the question, right? So if I'm asking you, taking away the educational portion, we're out in the real world, and I am your boss, and I ask you a question, I don't want the fluff. I want something that is relevant to the decision that I have to make. So if I say, hey, we're building a house and we're a construction company, I'm saying, hey, what is it going to take us to complete this home? If you start giving me fluff and not telling me exactly what it's going to take to complete this home, that information is not useful. You're not giving me something that will help me make a decision on maybe, do we build another home like this? Do we scrap it? Do we need to renovate it? What do we need to do based on the information that you're giving to me? So don't give me fluff. We want information that is relevant to the user, information that actually affects their decision-making process. We also have reliable. So does the information reflect what actually happened in the organization, or does the information reflect what makes the financial statements look good in the end? So when we talk about reliable, can I rely on this? It's kind of like when I'm, I ask you to do something, for instance, can I rely on you to do that? Or am I going to be upset because you're going to blow it off and not actually do it? So when we're talking about information, we're talking about the same thing. Is the information being provided to me reliable, or is it just blow off stuff? Okay. I want reliable financial statements, or I want reliable reporting so that I can make decisions. If the numbers are just estimates, and estimates are okay in some aspects, but if they're just guesses and estimates and no cohesive understanding of how those estimates came, then that's not really useful at the end of the day, because I can't really make an accurate judgment on what to do with that information that isn't reliable at the end of the day. So we want to make sure that we can actually rely on that information and it reflects what actually is happening within an organization, or what's happening on, let's say, the production line. Then we have complete. So obviously, does the financial statement include all the information necessary for faithful representation of the economic phenomenon that it purports to represent? So is it complete? Do I have, and take this with a grain of salt, because I know I'm going to contradict myself here from another point that I made here, but do I have a complete, is the information complete as much as possible? Now, I don't need all the information. I just want to make sure that it's complete. This is specifically targeted to financial statements. So when we're issuing financial statements to external users, I want to make sure that it's complete. So all journal entries that were supposed to happen are in the financial statements that are being reported to me today. If the financial statement is missing like a block of transactions, then that financial statement is not complete. It's not accurate. It's not reliable. And really, at the end of the day, it's not relevant to me because it has wrong numbers. So we want to make sure that information is complete, or as much complete as possible, so that we can make a better decision. We also look at timeliness. So timeliness is the idea that financial statements are issued in a timely fashion to the end of the period. So when we talk about timely, am I getting this information, relatively quickly, or am I getting this information 2 or 3 months, or even 2 or 3 years later? I need information that's timely because we're trying to be agile to what's going on in the marketplace. Understandability is the idea that information is written in a way that a person who has a basic knowledge of business can understand. We talk about understandability. It's not that we want this to be very basic, okay? We would expect a manager who comes in to their role as a manager to understand basic business topics and languages, because legitimately they should have that type of knowledge and tool set in order to be a manager. But, we would expect them to have a basic level of business. Now, when we provide information to them, we should make sure that it's understandable. We don't expect to be able to take our information and, give it to some Joe Smo who's never had a business class or never had business experience at all. But we would expect that the information that we do provide, a person with basic business knowledge can understand. And if we make it too complicated or we make it too technical, then that doesn't really help us and help them at the end of the day. So we want to make sure that it's understandable with someone who has a basic knowledge of business at the end of our day. Now, we also want to make sure that we have information that's verifiable. So verifiable or verifiability of financial statement is the ability for another accountant to replicate the same work and get substantially similar results. So when we talk about verifiability, we're talking about the idea that can someone else do our job? So if we can step away from our job for a second and someone else comes in and replicates everything that we do, can they get to a substantially similar result? Okay, whether that is information that's provided in a financial statement or a report that we need to give to a manager, can they get to substantially the same result? Now, notice I didn't say exact result, because remember that accountants have, some degrees of freedom as far as how they look at information or data that they're given. That's called professional judgment. And that professional judgment allows me to say, you know what, I'm going to treat it like this, even though someone else might treat it like this. Okay, so we do want some similarity to the information, but we don't need exact when it comes to verifiability. And then lastly, we have accessible. Accessible means how wide is the accessibility of the financial reporting, and is it in the format that they can use? So when I look at accessibility, obviously internal documents or internal reports shouldn't be given to external investors or external users. But based on where that information is or who has access to it, is it accessible to the people that need to know it? So for instance, we might have an ERP system, enterprise resource management system, or enterprise resource planning system, an ERP system that we've delegated certain people can see and certain people can't see. Well, all the accounting individuals or accounting staff has access to the accounting modules, but the CFO doesn't. And the CFO needs that information to make cash management decisions. Well, that doesn't make sense. They don't have access, even though they should have access at the end of the day. So we want to make sure that our information is accessible to the parties that need to know that information at the end of the day. So that is a look at what I would say 7 characteristics that would make information useful at the end of the day. So when we look at what information that we have built from our accounting information systems, we do want to make sure that it has some of these characteristics in order to be useful to the end user. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, thanks for watching this lesson. If you're looking for the next lesson, make sure you hit up that lesson right over here. And if you are looking for the entire accounting information systems course, make sure you head to my website at www.patrickleemsa.com, where I have the full AIS course available to you. So until next time, we'll see you in the next video.